Hey traders, Stephen Quitzel here with the Trader's Plan. Happy Friday. The market is open, slightly down today. We're just going to look at some stuff. We're going to look at the overall indexes. We're going to look at some secondary indicators, and we're going to look at some actual investment ideas. So I'm going to try to make this just a simple, short, what's trending in the market video, so you can easily consume it on the weekend or even today, just as you make it a part of your routine. So I'm at stockcharts.com. I do a lot of my stuff in there. So let's just kind of go see the market. You can see the NASDAQ is down a little bit. We're down a little bit, but we're not down a lot. I don't really care how the market ever opens. I more look at how it closes. So what I like to do, just real quick to get a summary of what sectors are moving, I like to go to this sector summary real quick just to see what's up and what's down. You can see small caps, even though they're basically breaking even today, are leading. Utilities was the best sector yesterday, I believe, and it seems to be leading even to the downside today. So keep an eye on that. Transports are down. So got a mixed bag here with small caps on top and transportation on bottom. Probably the main reason the small caps are on top is because the financials are on top today, and you can see industrial and energy are towards the bottom. So nothing really just standing out so far. Broker dealers and biotechs today seem to be the slight leaders, and semiconductors are getting slammed, and disk drives hardware. So a little profit taking in technology on Friday. If we go down to international ETFs, really when I do this, I just like what are the top 2 or 3 and what are the bottom 2 or 3, just see if anything really stands out. So it looks like there's a lot of profit taking right now in Europe. Let's look at then I glance at the commodities real quick. Corn's kind of been all over the place. We're going to look at some industrial metals because they're looking quite interesting. All right, let's go look at some charts. Let me go down here and grab my chart list. Let's start with the S&P 500. So you got the S&P 500 right here, and it just continues to climb the wall of worry. You can see this was pre-election, and then you had the election pop, found support at the 200-day moving average, and really it's found support at the blue line, the 50-day moving average for the most part. You can see it slightly dipped below here. Really since the election started. So you have these little, bull flag breakouts. You got a breakout, comes down, tests this zone right here, finds support, pulls back, finds support, the 50-day moving average, pops again. We'll see if it'll probably ease a little bit again. I was noticing right here as this was starting to move up a little bit and getting a little choppy, I was thinking this was going to be the pullback that kind of brought us down, maybe to get an intermediate correction, but it just didn't happen. Feels very 2013ish. So you can see a lot of distribution coming in. Then you had some accumulation. You get some more distribution, but the price action is bullish. Breadth is bullish. So it's one of those markets where the fact that it is so overbought right now, I'm really hesitant to just over trade at this moment. But your positions that are working, those are the ones you just want to stay in as long as you can until they break a major moving average. But you don't want to sell too early if we are just in a raging bull market, which it appears that we are. So now you have the Russell 2000, and this is interesting. So you had that initial pop, right, when the election happened, and then you really had a trading range since the beginning of September. And I thought it was going to top out and break, but it didn't. A couple of days ago, it broke through to all-time highs, and man, it just keeps climbing. And what's interesting is you can see that it hit the top of this range, it fell down, it hit the top, fell down, hit the top again, and then it created a smaller base, a tighter consolidation, and then broke out. So a lot of times when you see a consolidation, whether it's in a stock or an index, gets sloppy, then starts to tighten up a little bit. It's typically a bullish sign. And as you can see from right here, you can see the Russell 2000 was really, this is a relative line, Russell 2000 versus the S&P 500. You can see it broke out versus the S&P 500 down here. Now this is a relative line, meaning if the line's rising, small caps are outperforming large caps and vice versa. And what happens a lot of times on these downtrend breakouts, it'll break out and then it'll come back and it'll test the trend line. So it'll kind of shake you out right here because you're thinking it's going to go straight up, and then it'll continue to rise. So let's look at biotechs, and this is the biotech index. You know, from 2012 to April 2015, just the index alone was up 335%. That is massive. So biotechs were on a tear. If you had some individual stocks, they more than did 335%. The good ones, and then they've just been underperforming for a couple of years now. And the main reason that is, it has to digest all of these gains, right? And then you have, I mean, you could call this a massive bull flag, but you can see it's sloppy, 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 and then look, it starts to tighten up, and then boom, it breaks out right here. And at the same time it breaks out of this consolidation, it breaks out of the relative line versus the S&P 500. So when this line is going down, it means it's underperforming the S&P 500, and then you have a relative breakout, and then you have a breakout of a consolidation. So right now, biotechs are bullish, and considering they still got some ways to go before they hit their 52-week high, there could be some room to run as sector rotation happens and money moves maybe from technology to other sectors that have been underperforming. Had to get a sip of coffee. So this is the Bombay Exchange, and why this is important is because emerging markets have really been strong. Have outperformed the last about a year and a half versus the S&P 500. So then you look for strong markets. India has phenomenal growth. It has phenomenal demographics. So you can see right here, if you were looking at this stock, this is a nice cup with handle on the index. Now this is since 2000, the Bombay index from 2000 to current. But here's what I wanted to point out. So you have the Bombay index versus the S&P 500 relative line. So it's been underperforming the S&P 500 since 2010, late 2010. It's been underperforming. But look, it is starting to, it looks like it's about to break this relative line versus the S&P 500. So if it's been underperforming since 2010 for about 7 years, it could go on a significant outperforming run for about 7 years, 5 to 7 years. So for a significant period of time. So I just want to show you this. So as money rotates from the US to more international, you just need to pay attention because that outperformance could be significant. So if you have a long-term ETF portfolio, you might want to consider taking some percentages and adding in some emerging markets or adding in some Indias as long as the chart makes sense. And down here I have the SMIN ETF, that's India Small Cap ETF versus the S&P 500. You can see it has already broke out versus the S&P 500 on a relative basis. So I like India long term. I like India over the next 3 to 5 years because it is knocking on the door of outperformance. And based on the outperformance, from 2000 to 2010, underperformance for 7 years, it could outperform for a significant period of time. Pay attention. All right, so miners. This is something I learned from Greg Chanel. It's just really simple, and I like to look at relative charts because I want to know what something is, if something is beating its benchmark or the S&P 500. But this is the GDX. This is the gold miners versus the GLD, the actual metal. And what I have learned, or what I've been taught, is when the miners are outperforming the metal, that's a good time to be long gold or whatever miner it is. So if you look at right here, you have this downtrend where miners have been underperforming the metals, and just a couple days ago you had another breakout where the miners are starting to outperform. So gold is starting to look interesting. Now I say disclosure because I've been shaken out of gold a couple times this year where it has a breakout and then it rolls back over. So, but you can see it's starting to slow down its downtrend. So even though gold, it popped in a big way towards the beginning of the year and then it really has been going down, don't fall asleep on it because it's starting to creep up and it's breaking out relative versus the metal. Down here, Now this is the gold miners versus the gold junior miners, and the junior miners are the more aggressive miners. So you can see that the junior miners have been outperforming the large cap miners since April. So that also is a bullish sign. So now if you take a position, if something looks interesting in gold, you always want to make sure that you have your stops in place, because you don't want to ride something all the way down if you have a false breakout. Okay, so this is the S&P 500, and I'm not going to focus on this chart. I want to focus on these relative ratios down here. So you have the small caps versus the large caps relative ratio. So really you have the small caps, and we already kind of looked at this. They broke out and then they came back and tested that line, and now starting to trend up. So I would check this in the bullish camp, right? These are secondary indicators. Then you have discretionary stocks versus staples. So your staples are your cereals, your cigarettes, you know, recession-proof type stuff, versus discretionary, which is retail type items. So it was underperforming, and then boom, you had a breakout, and then it came back and tested the line, and then it's going up. So discretionary stocks are beating staples, which is another bullish sign. Now you have down here transport versus utilities. Now utilities, the trend is down. Utilities have been beating transports, which we want transportation stocks to beat utilities, because utilities are a defensive sector. And it broke out, but you can see it came back and it tested the line. So we're really getting close to seeing if this line can hold. So I'd say this action is bullish, but we're kind of somewhere in the middle. We kind of got to wait and see. And then you have the S&P breadth, the percentage of stocks that are above their 200-day moving average. And you can see it's trending down, but is starting to get bullish again. And even though it trended down from 85 to 71, that is still bullish. You know, 70, when it starts to get below 60, that's when you want to have some caution. But it is still bullish, and it is rising, and it is breaking out on the breadth. So a lot of things are looking bullish right now, but I would just be cautious because, you know, the market's a little stretched. We're heading into the summer months. You know, August and September are the two worst months of the year. So I just would be cautious on being too giddy in over trading. I tend to try to under trade on times like this. One other chart before I get into some individual stocks I just wanted to show you is this S&P 500 versus the world. Let me kind of annotate this. Let me edit this real quickly. So you have this, and this is another relative line, okay? So this is the S&P 500 versus world index, all world index. So you can see from when the line is downtrending, when the black line is downtrending, it means that the S&P 500 is underperforming the world stocks in the emerging markets. So you can see really the world and emerging markets outperformed the US until 2008. So it was in a downtrend, and then it broke out, meaning the S&P is starting to outperform, came down and tested, and then the S&P 500 has really been outperforming the world markets since 2009, 2010, okay? This is a serious trend line right here. You need to take it seriously based on the length and how many times it's been touched. Now look, that line is broken. The trend line is broken, meaning world stocks might be taking the helm, and they might start outperforming US stocks for a significant period of time. Now it could chop around for a little bit. I'm not saying this line is going to go straight down, but it's worth noting we could be in a transitional period where world stocks and emerging markets outperform again. Okay, so let's look at let me go to a different chart list, and let's look at some individual ideas, not that. I just want to kind of look at some individual ideas that are looking interesting right now. I have no holdings now. This is a this is a Chinese stock, so there does come more risk. But if you look at the daily chart, man, it's really all over the place. So I don't recommend buying this right now because it's extended. But you know, it really has been underperforming the S&P 500 since for a long time. Actually, I could stretch this out even further. And then all of a sudden, it broke out relative to the S&P 500. At the same time, it was breaking out of this cup with handle pattern, and look at this massive, massive volume that just shot this stock straight up. So it has accelerating earnings, it has nice fundamentals, and if this pulls back into the 29 area, maybe it gets oversold in the short term. I'm probably going to enter a position unless, assuming everything else holds. If we look at the weekly chart, let me look at the weekly chart does look pretty bullish to me. You can see it broke out of this here. Let me just draw this trend line. You can see it broke out of this downtrend line right here, and you can see it's sloppy, it's sloppy, it's sloppy, and then it starts to tighten up, and you can see the little cup with handle breakout. So if I draw this, where is that? So I can draw this right here. Actually, let me change the color just so you can see that. Nice little cup with handle breakout. So just something to keep your eye on. You might want to have it on your watch list. Now miners are looking interesting too. Another miner that is looking interesting is Vail, and you can see that it made a massive run from $4 to $11. It was in a downtrend, so it made a nice little correction, and then it broke out, and then it came down and it tested the cluster moving average, so it tested support, and you can see in its breakout it had volume stepping in, right? And now it's coming back. It might test it again. So this stock is looking very interesting right now. I also want to look at just the oil and gas sector, and how this looks. It's been in a downtrend. Went from 25 bucks all the way down to 14 bucks. And it did not make a lower low. You can see right here, it found support, came back, tested it, and then busted through the 50-day moving average and is coming back and testing this again. So this is really interesting right here, because you have, when an investment, a stock or an ETF does something it hadn't done in a while, you need to pay attention, okay? So now I'm starting to get interested in some of these oil and gas equipment, because even though it's pulling back, let's see if it finds support, maybe chops around for a little bit, and then takes off. And last but not least, I want to look at Polaris, and this is a growth stock that used to be a high-flying growth stock. And you can see, now I'm switching it to the weekly chart, you can see it really had a waterfall effect from 150 bucks all the way to 65, and it's really been consolidating, but the earnings, it has some things going for it. The earnings are starting to turn around. The earnings are starting to, why is it not letting me? I don't know why it's not letting me do that. But you can see it's breaking out of this downtrend right here. Let me try this one more time. Okay, you can see it's breaking out of this downtrend right here. And it bought out Indian motorcycles a couple years ago and is reviving it. And they've been selling it now for about a couple years. So it could be kind of the turnaround growth story. So it's looking like it's in a first stage bottoming pattern. So it's starting to break out of a downtrend. And if it breaks out of this horizontal around 100 bucks, you need to take this stock seriously. So just a couple ideas to think about. I hope this was helpful and gave you some ideas and some stuff to think about over the weekend. Let me know if you have any questions.